Your OAS pension might be smaller than you think it should be, and it is not because of an error. It is because of a rule that has quietly been catching more Canadian seniors every single year, and most people only discover it after their deposit has already shrunk. Today, we are going to talk about what is actually happening to OAS in 2026, why some seniors are seeing reduced payments starting this July, and what you can do to understand where you stand. There is no panic needed here, but there is real information that could matter a great deal to your retirement income, and you deserve to hear it clearly. Welcome to Canada Pension Map. This channel is built on one principle. Trust is more important than clicks. Every number you hear today comes from official Government of Canada sources. Nothing is invented and nothing is exaggerated. If something is uncertain, I will tell you it is uncertain. Drop a comment and tell me whether you are currently receiving OAS or if you are still planning ahead. I read everything. Now let us get into what is really happening with OAS this year. Old Age Security is a monthly pension funded by general government tax revenue. Unlike CPP, it does not depend on what you earned or how many years you worked. It is based on how long you lived in Canada after turning 18, and it is available to most Canadians at age 65. For the April to June 2026 quarter, the maximum monthly OAS for seniors aged 65 to 74 is $743.05. For seniors aged 75 and older, the maximum is $817.36. That higher amount reflects a permanent 10% enhancement that the federal government introduced in July 2022. It applies automatically the month after your 75th birthday. No application required. Starting July 29, 2026, OAS increases again. The Government of Canada has confirmed a 1.2% quarterly adjustment, which is the largest cost of living increase of 2026. After July 29th, the maximum for ages 65 to 74 rises to approximately $751.97 per month. For ages 75 and older, it becomes approximately $827.17 per month. So far, that sounds like good news, and it is for many seniors. But here is the part that does not always get explained clearly. OAS is not guaranteed to arrive in full for every senior every month. There is a built-in rule called the OAS Recovery Tax, which most Canadians refer to informally as the clawback. Here is how it works in plain language. If your net income from all sources in a given year exceeds a specific threshold, the government begins recovering a portion of your OAS pension. The recovery rate is 15 cents for every dollar your income goes above that line, and the reduction is applied directly to your monthly OAS payments for the following 12 months, not as a separate bill, not as a lump sum, but as a quiet monthly reduction spread across a year of deposits. For OAS payments from July 2026 through June 2027, the relevant threshold is based on your 2025 income. If your net world income in 2025 exceeded $93,454, your OAS payments starting July 29th will be smaller than they were in June. This is a real and confirmed number from the official Government of Canada quarterly report. If your 2025 income was below that threshold, you are not affected and your full OAS continues. If your 2025 income was above it, your monthly OAS has already been recalculated downward. The reduction began with the July 29th payment. Now here is what makes this particularly important to understand in 2026. More Canadian seniors than ever before are finding themselves above this threshold, not because they became wealthy, but because of how retirement income stacks up. Consider a senior receiving CPP of around $900 per month, OAS of around $743 per month, a modest private pension, and mandatory withdrawals from a registered retirement income fund. A registered retirement income fund, or RRIF, is simply a savings account the government requires you to begin drawing down after age 71. Those minimum withdrawals count as taxable income, and they increase each year as a percentage of your remaining balance. When you add CPP, OAS, pension income, and RRIF withdrawals together, Crossing $93,454 annually is not as difficult as it sounds. Many seniors who consider themselves middle income are discovering this for the first time when their July deposit arrives smaller than expected. Let me show you what this looks like in practice. Imagine a retired couple in their early 70s living in Ontario. One spouse has a strong employment history with CPP of about $1,100 per month. They both receive OAS. They have pension income from a former employer and mandatory RRIF withdrawals. Their combined household income is comfortable, but neither of them is wealthy by any standard. Here's something important. The OAS clawback is based on each individual's income, not their combined household income. So one spouse might be above the threshold and the other might not be. The one above the threshold sees a reduction. The one below does not. This is why understanding your individual income situation matters, not just your general sense of how you are doing financially. For that individual above the threshold, the math is straightforward. For every dollar of 2025 income above $93,454, 15 cents is recovered from OAS. A senior with a 2025 income of $103,000, which is roughly $9,546 above the threshold, would see an annual OAS recovery of approximately $1,431.90. That works out to about $119 less per month in OAS payments from July 2026 through June 2027. It is not a minor adjustment for a senior on a fixed income, and for seniors whose income reaches higher levels, the reduction grows proportionally. OAS is fully recovered, meaning the payment effectively stops when income reaches approximately $152,062 for seniors age 65 to 74, or approximately $157,923 for those 75 and older. There is also an important timing detail that many people miss. The clawback for the July 2026 to June 2027 period uses your 2025 income, but the clawback for the July 2027 to June 2028 period will use your 2026 income. The threshold for the 2026 income year is approximately $95,323. That is the line you would need to stay below in 2026 to protect your full OAS payments starting next July. This delayed timing is why planning matters. If you had an unusually high income in 2025 because of a property sale, a large RRIF withdrawal, or any other one-time income event, the impact shows up in your OAS payments now, not then. And if your 2026 income is lower, the relief will not come until July 2027. This is simply how the system is designed. It is not a change or a reform for 2026. It is the long-standing structure of how OAS and the recovery tax interact. But because more seniors are being affected each year, it deserves clear attention. So what can you actually do with this information? The first thing is to find out where you actually stand. Log in to your My Service Canada account at canada.ca and check your current OAS payment amount. Then pull up your most recent notice of assessment from the CRA. The key number is online 23600. That is your net income. Compare it to $93,454. If you are below that number based on your 2025 return, your current OAS is not being reduced, and you have nothing to address for the current payment period. If you are above it, you now understand why your July deposit may be smaller than it was in June. The reduction is calculated and applied automatically. There is no error to dispute, but there may be steps worth considering for future years. The second thing is to understand which income sources count and which do not. Almost all taxable income counts toward the clawback threshold. That includes CPP, OAS itself, RRIF withdrawals, private pension income, rental income, employment or self-employment income, capital gains, interest, and dividends. One source of income that does not count is withdrawals from a tax-free savings account. A TFSA withdrawal does not appear as taxable income on your return and has no impact on the clawback calculation. This is one reason why some financial planners encourage seniors who receive OAS to draw from their TFSA before triggering large RRIF withdrawals in years when income is already high. The third thing is to think ahead about 2026 income. If your 2026 income will determine your OAS payments from July 2027 onward, and if you have some flexibility over when and how you receive income this year, it may be worth reviewing that picture before year end. Spreading a capital gain across 2 years, drawing from a TFSA rather than a registered account, or exploring whether pension income splitting with a lower income spouse might help are all conversations worth having with a qualified tax professional who understands Canadian retirement income. I want to be clear, these are not guarantees or advice. Everyone's situation is different, and decisions about income timing and account withdrawals should be made with a full understanding of your specific tax picture. What I am sharing is the framework. What you do with it depends on your circumstances. Let me quickly bring all of this together. OAS is increasing in July 2026. The confirmed rate is 1.2%. Starting July 29th, the maximum rises to approximately $751.97 for ages 65 to 74 and approximately $827.17 for ages 75 and over. At the same time, the OAS Recovery Tax is applying to any senior whose 2025 net income exceeded $93,454. For every dollar above that threshold, 15 cents is recovered from OAS. The reduction is spread across 12 monthly payments from July 2026 through June 2027. There are no legislative changes to the OAS Recovery Tax framework for 2026. What is new is that more Canadian seniors are being affected each year simply because retirement incomes, RRIF minimums, and CPP amounts have grown. Check your notice of assessment. Find line 23,600. Compare it to the threshold. And if you are close to that line this year, it may be worth reviewing your income sources before the end of 2026. You can verify all of the figures mentioned today through the official Government of Canada website at canada.ca and through the quarterly CPP and OAS benefit amounts page linked in the description. If you found this useful, please subscribe to Canada Pension Map. This channel publishes educational content on Canadian government retirement benefits every week. No sales pitch, no product, just accurate, clear information for Canadians planning their retirement. Leave a comment and tell me whether the recovery tax is something you had already heard of or whether this was new information for you. Your comments genuinely help me understand what to cover next. The next video covers how GIS is recalculated every July and why missing one tax filing can temporarily pause that benefit entirely. That video is linked in the description.